What's going on, guys? Bulls and the Bears here with the weekly recap video. First week of December is in the books. We are so close to the end of the year, and the account is looking pretty good. This is it's Saturday right now, but what you're seeing here is Friday's price action in my account. The account's over 31,000. We had a small green day on Friday, up $190, but it was a lot better. Take a look. You can see at the tippity top, 15 minutes into the day, we were over 32,000. We were up over 1,000 on the day. But we breached that next $1,000 mark intraday, but it came all the way back down. Why? Celsius, that's why. What a horrific stock that thing has been. I will cover it in more detail. I will slander the hell out of it and show you just why my account balance did this, because my account balance right here on Friday mimics the chart of Celsius on Friday. Just horrendous. But that's not all that happened. We go to the positions list. You can see, well, things changed. Can you tell what happened? We're welcoming a new position, guys. Uber. It had a sharp drop on Thursday, and I felt an opportunity to maybe start a position with Uber, and we'll talk about the fundamentals and why Uber had a drop on Thursday. I sold a covered call against it already, as I do, so that's already working. Celsius, we still have. I have covered calls against it for next week, which are already up quite a bit because of the sharp drop it had. And Tesla is no more. That's maybe the biggest news for the week, is that I closed Tesla. Tesla, you can see here on my watch list, up to 395. It just moved way too much, way too fast. And that's the nature when you sell covered calls. That's always the risk. When stocks do that, you get in a jam and you either get stuck in the position, or you got to roll out for a long time, or you just got to close it. That's just the way it goes. And I've accepted that, and I'm happy with that. So I closed it, and we'll cover that as well. But that's the quick summary. We are sitting with Tesla gone now. We have over 22,000 in cash. Let's just take a look here. Yeah, over 23,000 in cash, but we have a little bit of options collateral taken out of it because my Celsius covered calls are technically below my leap strike. So I'm setting up a built-in loss, and therefore Robinhood wants me to withhold some funds for that loss if I were to get assigned or something. But yeah, a lot of buying power. So I'm sitting primarily in cash here, which is okay because I'm generating a nice interest rate. And I'm just looking for opportunities. I want to rush into things. I already locked up a good profit on the month, as you saw on the thumbnail, about $860. And so this month should be good. Wrapping up a solid year. Not rushing into things. There are parts of the market that do seem pretty frothy, and I would like to take advantage of a sharp pullback if something happens. But so that's about it. Let's get into trading view. Look at some of these charts, and I'll explain what happened. All right, so we'll start with Tesla and cover my entire leaps trade that I had with it now that it's completely over. So first of all, this week was wild. If I go to the weekly chart, you can see we had a almost 13% green week. And that is a really big move in a short period of time. And that's when you're selling covered calls, a move like that is gonna put you in a pickle. And that was why I closed the trade. So we'll go to the 30-minute chart quick. So the week started with a gap up, which was nice. So we opened here to start the week around 350. My covered call was at 365, and we hit 360 on Monday. So I thought my covered call was going to be tested pretty quickly, and that was going to be under pressure pretty quickly. But that wasn't the case. It came back down, and on Tuesday it chilled around 350, and on Wednesday it chilled around 350. So at that point, most of the week was gone. Most of the time had come off my covered call. So I felt that this was going to work out. I maybe even get a Goldilocks scenario where Tesla reaches my covered call strike at expiration so that the covered call has so much theta decay taken out of it. It's as cheap as it can be, making rolling so much easier. So I was hoping that would happen. But Thursday, man, it was off to the races. Now 360 was a level of resistance. You can see 360 was definitely an area of resistance. I'll make this red because it had tested it several times. I mean, it rejected it back when I actually got into the trade over here. around November 11th. I rejected it. And then it came back up again over here at the end of November. It rejected. Came back up again on Monday of this week. Rejected. And then finally, on Thursday, we gapped up to 360. And once we pushed above it, it was off to the races. And that was tough. My covered call was at 365, and it quickly got in the money. And I tried to see what rolling would look like, and the best I saw was rolling it out one more week and up to the 375 strike, which would have been right about here, this level. And, you know, that was another $10 per share higher, so that's a good covered call adjustment. But when I was going to get like $200 credit for it, but I figured, you know, we're probably going to hit that level pretty quickly. And if my new covered call strike at 375 gets hit a little too fast, it puts me in a worse situation, in my opinion, because Theta has not worked on the contract long enough, so it is still expensive. It makes rolling that harder, so I'd have to add a bunch more time to get another successful roll, or just have to close it early, or I could wait for expiration. But if I wait, then I risk Tesla going through it and the delta on the covered call rapidly accelerating to the point where it's greater than the delta on my leaps, and I start to lose money. So there's so many factors when doing the wheel on doing the poor man's covered call, wheeling with leaps. So you know, I just had to weigh my odds. I don't know what Tesla's going to do, but I just had to make an educated guess, and I just decided to close it. It wasn't worth rolling it. And sure enough, Tesla hit 375 that very day on Thursday. So my covered call the new covered call would have already been in the money on Thursday. And then Friday, it's just run up to 390. So yeah, my covered call, if I rolled up to 375, would have been just as screwed as my covered call at 365. And I wouldn't have made too much extra money either, because you'd think by rolling your covered call up, you give yourself more capital gain upside, right? And that's true if you can hold it to expiration. Because what you need that new covered call to decay. You need to capture all that extra premium you collected to realize all those extra capital gains. You can't just roll it up and then all of a sudden you have more profit. No, you have to let the new covered call decay and let that play out, get it towards expiration before you can actually realize the additional capital gains. And with the next week not even having started yet, and Tesla already at 395, my covered call would have been $20 in the money with a whole week left to go. It just wouldn't have worked out. So in short, like I already said, it moved up too much too fast, and I decided to close it. So that was it. Again, I bought Tesla. I bought the position over here, the leap, and I sold covered calls along the way as it diddled around, and then on this massive rip higher, I closed it. So let's go into Robinhood quick, and I'll show you the breakdown of everything from the beginning too. So we'll scroll down. So here's the original purchase of the leap back on November 11th. So I paid $9,900, and we'll get the calculator for that. And we'll start with a negative $999 because that's a net debit. It's a cost. That's what we shelled out for the trade. And then I collected $1,030 on a covered call. So we'll add that to the balance to reduce the net debit. And then I bought it back for $515. So now I have to subtract $515 and have that as a net debit. I sold another covered call for $288. So that's $288 in proceeds collected. And then I purchased it back for $33. So that's money out the door. These were just some trades. I was trading some puts, I guess, intraday here. Don't worry about those. Looks like okay, here we go. I sold a covered call for $180, so it's $180 in credit. I rolled it here for $260, so I rolled it for another $260 in credit. So I'll add that to and reduce my net cost. I rolled it again for $75 up here, so it's an additional $75 credit. And then I bought it back for $19. Subtract $19. I sold another call for $194, so bringing in $194. And then lastly, I sold the whole thing for a net $10,356. So if I add that as the final collected proceeds, you get a net profit all in of $1,917 on the whole Tesla trade. But for this week, I already realized all the other covered call gains. Like, that was already in my books. We talked about that in other videos. But for this week specifically, I realized $650. It was the 9,900 here from that original leap cost, and then I collected the 194 for this week, and then sold everything for 10,356. Whoops. And that's the $650 realized this week. 1,200 was already realized in prior weeks. 650 was realized this week for the grand total of 1,900 all in on my Tesla trade. So sad to see it go, but that's just how we trade. I like doing the wheel. I like selling covered calls. It helps me mentally. It helps me psychologically dealing with trades. I like to have that hedge to the downside so that if my stocks do underperform or sell off, I am still winning on a piece of the trade. And that helps me mentally, because if I don't have that winning piece and I'm just straight up losing, that's when I do stupid stuff. So, all right, enough of that. Let's move on to Celsius. So $650 locked up with Tesla. Now we'll look at Celsius. I had covered calls. Well, I'll explain the circles in a minute. But this week I had covered calls at, I think, 33. Let's just take a look at that. And of course, Celsius did not rally. My covered calls were not threatened, so I closed them and realized a profit. But I'll just show you exactly what that profit is if my computer wants to load the screen. Okay. So, heading into this week, we had covered calls at 32. I collected $112 for it last week, and then early this week, I bought them back for $32, and that was an $80 profit. And then on Thursday, I sold new calls for next week at the 34 level, and I collected $160 total. 8 contracts at 20 cents a piece. So, there we go. That's what we got going on with Celsius. But let's take a look at this chart here, because I have a bunch of circled areas on this chart. And I want you guys to notice that every circle I have drawn here, every circle I have drawn here has price action in it. There are wicks. There is undeniable that Celsius was trading in these circles that I have here. You can see 3 straight days it was in this circle. Up here it was in this circle. Over here, couple days, couple wicks in this circle. Back here, several days touching this circle right here. Up here, again, several days of price action in this circle. You can see the wicks. Celsius undeniably was in those zones that I have circled here. And over here as well. Boom. So now that we've accepted that, we've established that Celsius was in these circles at one point in time, intraday, I'm now going to switch to a line chart. What's a line chart going to do? A line chart is going to show us the closing prices. Line charts are pretty simple. People don't really like them. Candlesticks give you so much more information, but sometimes less information can be better if you're trying to make a certain point. And line charts, what line charts do well is that they just show you the closing prices. They don't show you the noise. They don't care what the high was, what the low was, how big the body was. They don't care. They don't care where it opened. They just care, where did the stock finish? At the end of the day, once all the noises is filtered out, where did the stock finish? That's what line charts tell you. And look what happens when I switch to a line chart. Like, not even close. Like, this line chart doesn't even look like it was sniffing these circles that I have drawn here. What does that tell us? That tells us, although Celsius was in fact trading in these circle zones, it did not come close to finishing in those circled zones. Because every time it pushes up, it sells off and it finishes a lot lower than where it was intraday. I mean, look at this. It doesn't look like Celsius was way up here, but it was. We confirmed it. It was trading up here, but it closed way down here. Same thing over here. And maybe most egregiously, the past couple weeks. Like, these circles are pretty high above the line chart, because that's actually where Celsius was trading at one point in time, but it just continues to sell off intraday, finishing where the blue line is. It's just, it's horrible. It's horrible. And Thursday, and I've been talking about this. I've been talking about the upper wicks on this daily chart and how Celsius continues to put in upper wicks because it sells off every single day. It's a classic morning push and then afternoon dump. It's astounding. But maybe most egregiously was this Friday. I could not believe it. I mean, you can see it here. Just more examples. The pop and sell off, the pop and sell off over here. Boop. Upper wicks, intraday. It pushes up and it sells off. It's horrible. But never to this magnitude. This is the most bearish example of this happening. Because Celsius gapped up. Closed down here and it opened way up here. And then beyond that, it pushed way up here. Because there was another firm, let's see, Needham Investments, Needham Securities. Needham initiates Celsius Holdings at buy with a $38 price target. So a new buy rating from another firm with a high price target, higher than where it is. So that was a good sign. That was some good news. So it gapped up and it pushed up even after it opened. It wasn't just a gap up and immediate sell-off. It actually continued and followed through when the bell rang. Here's the 5-minute chart. So pretty good sign. And this thing was up over 9%. At one point, Celsius was over 9%. It was over $30 after closing around 28 the day before. So I was very excited. I was like, let's go, Celsius. Let's go. We got some good news. It gapped up. It's pushing up intraday. This is great. This son of a bitch went red. At one point. At one point, it was down 0.25%. After being up over 9%, it turned red. It didn't close red because it had a little push at the end, so it finished up 1%. But it actually turned red after being up 9%, because that's how horrible this thing has been. So this is the most dramatic example of a morning push and then an afternoon sell-off. To be up over 9% and turn red is horrendous. And it just shows me that this thing is in no shape or form ready to rip up. It's probably going to crack this lower range of 27 and maybe make a new low. I don't know. But I did get covered calls sold off at least when it was still around $29 or so. Got some good credit. So at least it'll be paying us for next week. But yeah, I want to believe that a lot of this has to do with tax loss harvesting. I mean, think about how many investors were in at $50 or higher, even near $100 per share. It was trading above 50 for a while, about a year or so. And now it's doing this. So heading into the end of the year, a lot of big accounts and big money, they cut losing positions. Because generally, the whole portfolio has a nice net gain. But at the end of the year, you'll have to pay taxes on that net gain. So what people will do is they tax loss harvest, which means they look for losing positions that they don't really care for anymore, and they cut them. They realize the loss, so it lowers the net gain on the year, and it lowers their tax burden. And then, if they so choose to, 30 days later, after the wash sale period, they can just buy back the same position and benefit from the tax burden reduction and end up in the same position anyway if it stays down long enough. So that's a very common practice in the investment world, tax loss harvesting. They do it usually in the last month of the year when they know where positions are going to settle. And that could be, this is definitely a candidate for that, and that could be part of the selling pressure as of late. There's other problems. There's slowing revenue growth and all that stuff. So it's definitely not all of it, but I'm saying in the near term, the past couple of months, that could be part of it. So that would mean once January comes and the tax loss harvesting season is over, maybe, just maybe, some of the selling pressure lets up. And if those people who sold it early at the end of the year realize the losses, want to get back into it, that could bring in some buying pressure. So selling pressure would flip into buying pressure for that small segment of traders who are tax loss harvesting. That's just something to look out for. It might not be a huge part of what's happening. And even if it is technically happening and then it flips in January and people start buying it, it might not make a big difference. I don't know. It depends how much, like what percentage of the volume has to do with tax loss harvesting. Probably not a ton, but that is some theory to look out for. Maybe some selling pressure would lighten up at the end of the year or in the beginning of the new year. So that's what I hope for, at least. Next, we'll talk about Uber. This is the new position, and I bought it on this drop here on Thursday. I got it around 67.50. It fell further. It's at 66 right now. So I'm a little bit red in the position, as you saw earlier, about like $100, $150. But it was just a starter position. One contract. I'm looking to get up to 4 contracts if it keeps dropping. I have some green lines here as potential buy levels. Clear support over here around 63. I'd like to maybe pick up a contract there. And if it even comes close to this 55 area down here, I'd probably buy the remaining 50% of my position, 2 more contracts, and complete the full position there. If, of course, it gets to that point. But Uber has been doing very well. Since the bear market of 2022, it's come up quite a bit. It's held these levels in the $60 range. It's been doing a lot better. Revenue's been going up. Active users have been going up. Daily trips have been going up. Net income is positive and going up. So they're definitely operating a lot better and growing. So that's great. But Thursday news came out of Google's self-driving vehicle Waymo entering new cities where they're going to basically be robo-taxis. People don't realize, as well, maybe they do, but some people don't realize that Google has already been doing this. What Tesla's trying to do with robo-taxis and whatnot, Google has already been doing. They have a self-driving car. They have it picking up people as a taxi service. It's already happening. The car looks a little funky. It has cameras on the top and on the right and left side of the vehicle. It looks a little weird. Maybe it's not perfect. I'm sure Tesla will surpass it in quality in due time, but right now Google's doing it as we speak. And they've partnered with Uber in using Uber's network to connect people to drivers. They've been partnering them in a couple cities. I think Austin, Texas is one of them. But now Google's entering into more cities without a Uber partnership. So basically Google's kind of infringing in Uber's territory. So that was not necessarily a good sign, and Uber fell as a result. I'm not too worried about it. I don't think Google or even Tesla are going to just take over Uber's market. I think the more likely scenario is that Google and Tesla partner with Uber, or maybe even buy them out if it comes to it, because Uber has the network all set up. Like Google and Tesla, they'll have the vehicles, the self-driving vehicles, but Uber has the network that connects the vehicles to the people. Tesla could make their own network, but Uber already has it. Maybe it's just better to partner with them instead of dumping more money into R&D to get your own network, and you know, that'll add more time as well. So I'm not too scared about Uber, at least in the short term too, because these are trades after all. This isn't a long-term investment. So if it pops up to 70 next week, then I'll be out of it and no need to worry about it anymore. But I do think it's a quality company. The metrics are trending higher and growing, and I thought this was a good level to buy it at. So that's what I did. I have a covered call sold at 71, and there we go. That's Uber. Lastly, SMCI, because I gotta show you guys all the profits. This was just some trades on Tuesday, I think. It was a day where SMCI had a pretty big drop intraday, and along the drop, I was scalping calls. I did 3 quick trades, very small, nothing crazy, but they were profitable, so that's good. I bought a call for 280, sold it for 300 plus 20 bucks. I bought one for 249, and then I bought another one for 235, sold them both for 524. That was $40. And then I bought one for 490, sold it for 560. That was $70. So all in all, $130 profit scalping Supermicro computer calls. So nothing crazy, but technically profits realized on the week. And that does it. $860 profit for the first week of December. My monthly goal is something like 920. So we're almost there already. And with the covered call sold on Celsius for next week, we'll be at about $1,000 profit. So we're doing well. We are realizing a lot of gains and meeting our monthly goals. So this should be a good end to the year as long as these positions, open positions, don't tank on us. Honestly, Tesla was the biggest threat to dragging down this account. I know Celsius has been trending horribly, but I think it's not going to get too much worse. Like, it's at a pretty low level already. Tesla was the one that could have realistically went from 350 to 250, and that would have destroyed the account value. I would have been comfortable because I know Tesla can make those moves and I had time, but it could have really brought this account to like 25,000 if Tesla had a rough go. So that was the biggest risk. Now that Tesla's gone, I do think the account balance should hold pretty nicely going into the end of the year. So that's it, guys. That's the video. Thank you for watching. I hope you enjoyed. If you did, hit that like button, subscribe for more content, and I'll see you all next time.